Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to Prof. Umaymah and my fellow classmates. So today, my team and I will be presenting on Islamic Financial Service Act 2013. Now, before we begin, allow me to introduce you to my team, Nora Shima, Nurul Fatiha, Lingesh, and myself, Amar. So for my team, we will cover two parts of this act, which is Part 9 and Part 10. Part 9 is about business conduct and consumer protection. And for Part 10 is about Islamic money market and Islamic foreign exchange market. Now we will begin with the first part, which is business conduct and consumer protection. With that, I would like to pass the screen to Lingesh.
Thank you, Amar. So now I'd like to talk about Division 1 Interpretation, Section 133. So what is Section 133 about? It consists of 4: eligible compliant, financial consumer, financial ombudsman scheme, and financial product or services. So what is eligible compliant? So eligible compliant means a person who is eligible to refer a dispute to the financial ombudsman scheme in accordance with the terms of reference of the scheme. And financial consumer is any person who is used or maybe intending to use any financial service or product in the purpose of personal or domestic or household use. And also, financial ombudsman scheme is about the scheme where for the resolution of the dispute between the eligible compliant and a financial service provider in respect of financial services or products. And financial service or products means financial service or the financial product developed, offered, or marketed by a financial service provider for the financial consumers. Moving to Division 2. Division 2 is about the business conduct, complaints, dispute, and many more. So, under this division, there are a few sections. So, first we look into 134. So, Section 134 is about application. It should apply without prejudice to the provisions of the Capital Market Services Act in 2007 in so far as they may relate to capital market products or services which defined under subsection 2(1). Therefore, to coordinate the regulations of capital market products and capital market services, the bank should enter into a written agreement with the Security Commission. This is where to develop, offered, or marketed by the licensed Islamic bank or licensed takaful operator. Moving to Division 2, Section 135. Section 135 is about standard on the conduct business, which is the purpose of ensuring the financial service provider is really fair and really responsible and also professional when dealing with the financial consumers. Therefore, without limiting the originality of the subsection 1, the standards specified under the subsection may include such as the transparency and disclosure of the requirements, or including the provision of the information to financial consumers that have to be very accurate, clear, timely, and not misleading, and also the fairness of the terms that in a financial consumer contract for a financial service or provide. As we all know, where the bank specified the standard on the business conduct under subsection 1, which relate specifically or designed to capital market products or services. This is because this standard should be specified jointly with security commissions, especially for the financial provider to provide a better service based on the standard operation. So moving to Section 136 is about the prohibited business conduct, where any financial service provider who engage in prohibited business conduct as described in Schedule 7 cease to do so. So where the bank may issue written guidance under the section 277 without limiting the originality about the description of the conduct which amount to, or the factors that are to be taken into the account in determining whether the financial service provider has engaged in any prohibited business conduct that is already set out in Schedule 7 or not. And this also where the bank issues the guidance relating to the prohibited business conduct set out in the paragraph 5 and 6 of Schedule 7 to make awareness to the financial service provider to avoid that kind of prohibition things in the business conduct. Moving to section 137 is about approved takaful broker, approved Islamic financial advisor, or approved issuer of designated Islamic payment instrument to establish customer account. And this section is particularly where an approved takaful broker or the approved Islamic financial advisor receive the money from on behalf of a person who covered the takaful or a potential person covered for an account of licensed takaful operator in connection with a contract of takaful, proposed contract of takaful, or from on behalf of a licensed takaful operator for an account of a person covered. And therefore an approved issuer of designated Islamic payment instrument as may be determined by the bank which received any money from or on behalf of its user in exchange of Islamic payment instrument have to be issued, and such approved person should, for the purpose of these sections especially, establish and maintain one and more account for its customer in a licensed Islamic bank separate from its own account. So last but not least, section 138 under division 2. So what is section 138? Section 138 is about financial ombudsman scheme, where the purpose of this section is to ensuring effective and fair handling of complaints and for the resolutions of dispute in connection with financial service or products. Regulations may be under section 271 to require any class, category or description in the manner of financial service provider, and also where it's to be a member of financial ombudsman scheme have to be approved based on the subsection 2, and also at all the times they have to be comply with terms of membership such as scheme. And not only that, the bank may be approved any financial ombudsman scheme for the purpose of the membership or the purpose of the scheme itself, but due to the fact the regulations may be made by under section 271 is to be clear to ensure the financial ombudsman scheme is really fair, accessible and effective, including the regulations such as the matters that the bank have regard to and determining whether to approve a financial ombudsman scheme under the subsection 2 or not, and also the function and duties of or other requirements to be complied with by any person operating a financial ombudsman scheme. That's all from me. I pass the floor to Fatiha.
Okay, thank you so much, Lingesh. So now we move to Division 3. Number 1, Section 139, obtaining takaful outside Malaysia. So here, any company, foreign company or local company, they must get a general takaful license from Bank Negara Malaysia to operate general takaful business in Malaysia or to extend its services outside Malaysia. So BNM, they will issue the license once gotten the approval from the Ministry of Finance, and the company, they needs to mention the Syariah contract for general takaful to be applied in the operation. So the next one is section 140, provision relating to takaful certificates. So here, Schedule 8, they sets out provision relating to takaful certificate. And in takaful family certificate, all the following paragraph that I mentioned in the slide must be stated, which is firstly, the paragraph 1 of Schedule 8 of the Act deals with the misstatement of age. So, a licensed family takaful operator shall not avoid a family takaful certificate or refuse a claim under a family takaful certificate by reason only of a misstatement of the age of the person covered. The next one, number 2, is permissible takaful interest. So here, paragraph 3 of Schedule 8, they applies to a family takaful certificate issued in respect of a contract of family takaful entered into by a takaful participant on a person covered and other than the takaful participant himself. So a takaful participant, they entering into a contract of family takaful under subparagraph 1, they shall have a permissible takaful interest in the person covered at any time such contract of takaful in enter into, and at any time the takaful benefits are payable. Number 3 is the capacity of minor and to enter into contract of takaful. So here paragraph 4 of the schedule state that where the period of the coverage of a family takaful certificate is calculated by reference to the age of the person covered, and such age is not the true age of the person covered as shown by the proof. And number 4 is the refund of the takaful contribution. So paragraph 12 of Schedule 8, they requires a licensed general takaful operator to pay directly to takaful participant any refund or takaful contribution in relation to a takaful certificate which may become due to the takaful participant for any reason, including the cancellation of the takaful certificate or alteration in its term and condition. So the schedule prohibits any payment of such refund to be paid or credited into any takaful agent. And moving on to the next slide. The next one is section 141, which is pre-contractual disclosure and representation and remedies for misrepresentation. So this schedule becomes very effective on January 1, 2015. And the schedule, they wants that anybody who violates the obligation of disclosure under paragraph 11 of Schedule 9 is guilty of an offence and will faces a maximum sentence of 5 years in jail or a fine of 10 million ringgit or both if convicted. So this schedule has no effect on any takaful contract entered upon, changed or renewed prior to the effective date of the schedule. And in the event of the contradiction or discrepancy, the provision of this schedule will take precedence. So regardless of any other written law, the provision of this schedule apply to determine whether a licensed takaful operator may avoid a takaful contract for mispresentation, including a contract covering third-party risk related to death or bodily injury to any person caused or arising out of the use of a motor vehicle or land implement drawn on a road. So this implies that this schedule solely applies to the matter described in paragraph 2 of this schedule, but nothing else. So for the purpose of the schedule, a consumer is defined as a person or a group of people who enters into, modifies, or renew a consumer takaful contract with a licensed takaful operator propose to do so. So a contract or takaful entered into, change or renewed by an individual solely for purpose unrelated to the individual's trade, business, or profession is referred to as consumer takaful contract. So the next one is section 142, which is payment of takaful benefits under family takaful certificate and personal accident takaful certificate. So here, section 142 of the IFSA 2003 refers to the schedule 10 of the IFSA, which set out provision to the payment of takaful benefit upon the death of a takaful participant under a family takaful certificate and a personal accident takaful certificate issued in respect of a takaful contract entered into by the takaful participant during his lifetime. So under this division, takaful certificate is a reference to a family takaful certificate and a personal accident takaful certificate affected by a takaful participant upon his life, providing for the payment of takaful benefits upon his death. So that's all from me. Thank you. I will pass to Amar.
All right, thank you so much, Fatiha. And now I would like to explain to you Division 4, which is all about information and secrecy. Now let's have a look at Section 143. Now Section 143 explains and covers what makes an establishment to be an Islamic financial institution. So there are several traits and credibility that actually qualifies an organization or an establishment to be an Islamic financial institution. There are 5. First is an Islamic bank must have a license. Same goes to the International Islamic Bank. Then they must also have an approved operator of a payment system, an operator of a designated payment system, or an approved issuer of a designated Islamic payment instrument. Now, moving on to the next section, Section 144. So Section 144 over here explains and covers on the restriction on inquiry, specifically into affairs of particular customer. So in other words, Section 144 actually talks about people cannot get access to a specific information about a customer that includes affairs and accounts. So to elaborate more on that, orders from minister to a bank, nor a bank itself to inquire for specific accounts and affairs of a customer will not be granted, and it is restricted. So even minister that would like to get their information from the customer of a bank through a bank will not be granted. Same goes to the bank itself. Now, however, under the Financial Service Act 2013 or Section 47 or the Central Bank of Malaysian Act 2009, bank actually can exercise their power and or function under this act. They can actually inquire for customers' account and affair for their own use. Now moving on to the next section, Section 145. Now this covers and explains about bank secrecy. Now this is all about protecting the customer's information. Now allow me to elaborate more on that. Any information regarding customers' affairs or account cannot be accessed to any party and disclosed to any third party by anyone. Now that includes Islamic financial institution and its former officers, agents, and director. Now, so over here, it shows that no one, even the Islamic financial institution and their officers, could not disclose and could not spread this kind of information to anyone. Now, you might be wondering why they cannot do that. So this is the answer. So bank officers, they could get access to customers' information, affairs, and accounts only. Now, this is a strong only when the purpose to exercise their power or function under the Bank Negara Malaysia Act 2009. Now, the point that they are making here is the only time where they can get access to this information is only to exercise their responsibility, their function. For example, collection of information for bank use, not otherwise. So if they were to use this kind of information for personal use, now this could lead to a huge, massive, unethical outcomes. So what happens if they do not obey and they violate this law? So they would be fined up to 10 million ringgit and then a 5 years of imprisonment or both. Moving on to the next section, Section 146. Now, Section 146 explains on the permission for disclosure of customers' affairs and accounts. Now, allow me to elaborate more on that. Now, with the reference and compliance of Schedule 11, Islamic financial institution directors or officers may disclose any information or document regarding customers' affairs and accounts. So in order for them to get access to disclose this kind of information, they must obey and in compliance with Schedule 11. Now, what is Schedule 11? I'll explain shortly. Now, other than being in compliance with Schedule 11, they must get an approval in writing by a bank. Now, any purpose, moving on, any purpose for the usage of customers' information must be compliant with Schedule 11. Now, allow me to briefly explain to you what Schedule 11 is all about. So, Schedule 11 is practically a guideline for permitted disclosures. Now, this explains to the Islamic financial institution on when or why they need to get access to that customer's information and to whom that they would like to disclose that information. I'll give you an example. If a customer goes bankrupt, his or her information will be disclosed to all necessary connections. Now, if customer goes bankrupt, now that is a purpose or an outcome where Islamic financial institution could get access to that particular customer's information. Now, so when they find out that the customer has gone bankrupt, so the information about the customer will be disclosed to all necessary connection. For example, if they are blacklisted, they cannot apply for loans. They could not travel to another country. So that is one example for Schedule 11. Now I would like to pass to the next presenter, Shiba.
Thank you so much, Amar. So I will move on to the next division, which is the division 5, restriction relating to the consumer protection. So actually this division is not applicable to the banking or licensed investment banks because this sector, there is no restriction relating to the consumer protection. So next at the section 148, which is explaining about the Islamic deposit. So under IFSA 2013, Islamic deposit refers to an amount of money or any precious metal or any commodity or thing prescribed by the minister on the recommendation of the bank, which is accepted, paid, or delivered in accordance with Sharia. For example, on terms under which it will be repaid or returned in full amount of money, whether by installments or otherwise, with or without any gains. So next, under the restriction relating to consumer protection, under the section 149, which is the restriction on accepting Islamic deposit. So here, no one shall receive Islamic deposits except for the under a license granted, regardless of whether the transaction is labeled as loan, a financing, an advance investment, a savings, a sale, or a sell and repurchase, or by any other name. So anybody who violates this subsection 1 commits an offense and upon conviction there will be subject to imprisonment for a term not exceeding 10 years or a fine not exceeding 50 million ringgit or more. Okay, under the section 150, it explains the advertisement for Islamic deposit. So under this section, there is no person other than a licensed Islamic bank shall issue or otherwise facilitate any person to issue or an advertisement which contains any offer to invitation to make any Islamic deposit. So it means like no person can advertise Islamic deposits other than licensed Islamic bank. So any person who commits an offense and show on conviction will be liable to imprisonment for a term not exceeding 5 years or to fine not exceeding 10 million ringgit or both. Next is the section 151, which is the restriction on use of certain words. So under this section, there is some words that a person cannot or prohibited to use except with the approval of the bank. So the word that a person cannot use is that the Islamic bank unless the person is licensed under this act to carry on any Islamic banking business. The next word is takaful, Islamic insurance or Islamic assurance, unless that person is authorized under this act to carry any takaful business, takaful broking business, or Islamic financial advisory business. And the third word is that Islamic financial advisor, which is the person cannot use unless the person is approved under this act to carry on any Islamic financial advisory business. So if any person who commits an offense and show on conviction, it will be liable to imprisonment for not exceeding 8 years and fine not exceeding 25 million ringgit or both.
Thank you, Shima. So now we move to part 10. So part 10, it consists of only 3 sections from section 152 to section 154. I will explain about section 152, which refers to the power of bank to specify standards or issue codes. So the Islamic money market is integral to the functioning of the Islamic banking system. Firstly, in providing the Islamic financial institution with the facility for funding and adjusting portfolio over the short term, and secondly, serving as a channel for the transmission of monetary policy. So, financial institution and interbank investment would allow surplus bank to channel the funds to deficit bank, thereby maintaining the funding and liquidity mechanism necessary to promote stability in the system. So section 152(1) empowers the Central Bank Malaysia CBM to specify a standard or issue code for the purpose of developing or maintaining orderly condition of the integrity of and ensuring compliance with Sharia in the Islamic money market or the Islamic foreign exchange market. And the standard or code may only be specified or issued under paragraph 2B in respect of over-the-counter Islamic derivative derived from, reference to or based on profit rate for the purpose of ensuring compliance with the Sharia and maintaining the monetary stability, or and any market participant or any officer of the market participant in the Islamic money market or the Islamic foreign exchange market shall at all time comply with any standard specified or code issued by the Central Bank Malaysia under this section. However, the CBM, Central Bank Malaysia, are allowed to take action under any provision of this act to impose any condition, restriction or prohibition, including suspension from trading and restriction on dealings in this market on any market participant or any officer of the market participant for failure to comply with or give effect to such standard specified or code issued under this section. Thank you. I will pass to Amma.
All right, thank you so much, Fatiha. And now let's move on to the next section, section 153. Now, section 153 explains and emphasizes on the prohibited conduct in Islamic money market and Islamic foreign exchange market. So overall in this section, it's all about the examples of the contradictory action towards the Sharia principle law when you want to do the Sharia Islamic money market activity as well as the foreign exchange Islamic activity. So over here, Any Islamic money market and Islamic foreign exchange activity is contradicted to Sharia law must be avoided. Now, to name a few examples, one of them is creating an off-market rate. So this is where they put market out of the equation. So they will agree to only two involved parties to come up with the profit rate. So from here, it could jeopardize the whole market rate, and then they could it would send a wrong message to the market on the exact and actual price. The next is an ambiguous and misleading appearance in Islamic financial instrument. So as we all know that gharar should not is highly prohibited in Sharia law, because it would give a lot of uncertainty to one and another. So you might be expecting one thing, but you're not getting what you're expected. So same goes to here. Everything needs to be transparent and truthful to one and another. And then same goes to the providing uncertain or false information to another person. Again, gharar should not be included, and then some ambiguity and misleading information should not be included in the Sharia, in the Islamic financial activity. So what will happen if they violate subsection 1, which is the list of the activities that I mentioned just now, where we cannot do this kind of activity? What if we violate those laws? So those who violate law subsection 1 Sharia principle by contradicting it and emerge them in the Islamic money market and Islamic foreign exchange, they will be fined up to 50 million ringgit, and there is an imprisonment for not more than 10 years or worse, both. So with that, I would like to pass the screen to Shima.
Thank you so much, Amar. So last but not least, I will explain about section 154, which is the arrangement with the relevant supervisory authority. So under this section, IFSA 2013 already stated that the bank shall enter into agreements with their relevant supervisory authorities to collaborate on the regulation of Islamic financial instrument that traded in the Islamic money market. So here, any authority, entity, or any agency in Malaysia is very responsible for the supervision or oversight of the capital market intermediaries, and capital market participants other than the bank itself. So that is all from us. Thank you so much.